Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Wednesday, November 25th, 2020. And here are our top stories. ESG investing is now 1/3 of U.S. assets under management, and new ratings reveal who's serious about ESG. Joining me now to discuss this and more is Bob Colley. He is the principal with Colley ESG based in London in the UK. Bob, thanks so much for joining us on the program this morning.
It's a pleasure to be here, Jeff.
So let's jump right in because based on a recent report, it looks as though about 1/3 of U.S. investable assets are in ESG funds, and that's just groundbreaking. I mean, that's just amazing. So I wanted to, when I saw this report, the first thing I said was I have to call Bob and have him kind of weigh in. So why don't you weigh in on this? What's this mean?
It is. I mean, ESG has been around in a sense for a long time, but it's one of those things which maybe took a long time to become an overnight success, in that it's been building up. And a few things have come together in the last few years which have really kind of reinforced one another and caused this explosion in interest. And all of those factors really come down to two different drivers. You can summarize them as under two main headings. The first of those drivers is the recognition of just how financially important this stuff is. So when you look at, say, the changing energy needs of the world, that's an investment theme which is financially important. You can't analyze energy stocks or transport stocks or any of those things without thinking about some of the environmental implications of each business model. And so what you have there is the financial impact of environmental, social, governance factors is being seen as being a bigger and bigger part just of normal investment. So in that sense, ESG is just investing, but it's looking at a lot of factors which maybe traditionally wouldn't have been as high on the list of what analysts were looking at. So that's part of the story, but it's not the whole story. And of course, the other reason that ESG is gaining a lot of ground at the moment is there's increasingly a recognition that investment decisions have an impact. The things that we do also interact with the way that the economy works and the way that the environment works, and it has a wider impact than just the investment decision itself. And so this idea that investment doesn't happen in a vacuum is increasingly shaping people's desires about how they want their money to be invested. Now, what aspect of that wider impact you're concerned about varies hugely from individual to individual. Some people would say, well, climate change is the only thing that really matters right now. For other people, it may be social issues that are more important. And this is not just the domain of one end of the political spectrum either. I mean, some of the ESG considerations and the factors that would be taken into account would be considered, under the right wing header, and others would be seen as more left wing. So there's a very broad range of concerns that you might have about the impact of investment decisions beyond the purely financial. And when you add that into the mix, along with this recognition of how financially important this stuff is, it's just caused this enormous increase in interest and focus on ESG in the last few years.
So, Bob, this is, in my mind, this mainstreaming, or for lack of a better term, I mean, it's mainstream not only among fund managers and institutional investors, but it's also mainstream among individual investors. And you can kind of look at different cross sections of the population, whether it's, mature investors, whether it's, millennials. People, as you said, want to, they want to earn a return, but they also want to do things to mitigate change. Is this, and I suspect that this is a trend that we will continue to grow, but what about in places like the UK or in Europe? We're here talking about the US, but is this a trend that you're seeing equally in Europe, or maybe Europe's even further ahead than the US?
It is, and I would say that probably the biggest driving force for Europe in particular at the moment is the EU, the European Union, is actively regulating to try to encourage more of this. And so, whereas in the US, perhaps the regulator has a more ambivalent view here, some legislation is kind of encouraging for ESG, and then other legislation is is putting more of a brake on it. When you move to Europe, you see the legislative background, the regulatory background is very much pushing and trying to find ways to allow investment decisions to incorporate ESG factors, especially around climate change. I think that's one which all around the world people are really looking on as that being a very major concern. We want to find ways to let the investment world, to let markets find solutions for an energy transition to a more sustainable model of generating energy.
Bob, one of the things I took away from this report was that there's a majority of assets in what are called undisclosed vehicles. And I'm kind of curious what that means, because we're going to talk about ratings in the second segment, but are these vehicles that are maybe non-traditional vehicles? Maybe they're vehicles, they're not necessarily mutual funds, maybe they're closed-end funds. Can you help us understand what this is and what this actually means?
The categorization is always difficult. So anybody who's aggregating information from, as you'll know, if you're looking at different sources of information and then you're trying to add it together, sometimes it's difficult to match up, well, this is like this, and you add it up to create the totals. So I think where you see anything where you've got a large miscellaneous or other or undisclosed, it tends to mean just that maybe the quality of the underlying data maybe doesn't allow you to be too specific about it. And in an area like ESG, definitions are difficult, and categorization in general, it's that's a feature rather than a bug in the sense that it is a very broad area and one that's changing as well. Priorities change and we learn new things, and so yes, I think we one of the things we have to accept in this space is that sometimes the labels are a little bit fuzzy and maybe not completely consistent, and that's the sign of a maturing field. It takes time for things to get locked down and everybody to be using the same language to talk about the same things.
Yeah. Well, thanks, Bob. I want to take a very quick break because when we come back, I hinted to it during this segment, we're going to talk about, does having a rating system indicate how serious investors are and investment firms are in terms of ESG? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Hi folks, Joe Namath here, and if you're on Medicare, this is important. You're now entitled to eliminate co-pays and get dental care, dentures, eyeglasses, prescription coverage, in-home aids, unlimited transportation, and home-delivered meals, all at no additional cost. Plus, your zip code may have coverage with the Give Back benefit that adds money back to your Social Security check every month. Look, with the uncertainty of the virus and vaccines, you need to get everything you're entitled to. Here's the bottom line. Call to get significant benefits at no additional cost and see if your zip code has coverage with the Give Back benefit. Millions of people have trusted the Medicare Coverage Helpline. You can too. Call now. It's free.
Call 1-800-924-3920. That's 1-800-924-3920.
Welcome back. We're talking to Bob Colley of Colley ESG. Bob, thanks so much for staying with us this morning.
As I said, it's always a pleasure to talk to you, Jeff.
Absolutely. So Bob, we talked about it, the importance of understanding what people are investing in, what ESG really means. Let's talk about ratings, because I guess since the beginning of investing, we've talked about benchmarks. We've talked about sectors of the economy. What's the latest on ratings within ESG or sustainable investing funds?
It's attracting a lot of interest because everybody now is telling an ESG story, and different firms are doing it very differently, as you'd expect. The investment processes are not the same, so how you incorporate ESG into your process is not the same. And so investors, naturally enough, want to know, well, is firm X or firm Y actually doing what they say they're doing? Who are the ones who are the genuine leaders? And so what they'll do is they'll look to firms who they're used to using for rating in other senses. So you'll know who the firms are that produce ratings, either quantitatively or qualitatively based, to come up with who they think are the strongest firms in various ways. And so those firms increasingly are moving into the ESG space, adding that to all the ratings that they already produce, and coming up with opinions on here are the leaders, here are the ones who are behind, frankly. And so that's a normal part of the process where you have a lot of interest in an area. You're going to have the rating firms coming in with their views.
But even if you can, Bob, these are big organizations that are collecting data. I mean, you can tick them off: the Morningstars, the S&P globals of the world, Dow Jones indices. I mean, they're collecting all this data. But I would say, what for the individual consumer or even the institutional investor, you really have to understand the intricacies, because comparing like to like and apples to apples and oranges to oranges can be very challenging. I mean, it just goes back to, and I understand this is a new asset class, or maybe not new, but it's getting a lot of attention, and so it's getting a lot of hype and whatnot. But as an investor, you've really got to be able to say, if I pick this fund, it's because of these factors, and this is what I like about it. But how does it compare to others when maybe performance isn't there, et cetera, when you're doing due diligence?
That's right, and just making it tougher is, let's simplify a little bit, and let's suppose that I, as an investor, am really concerned about climate change, and that's the one factor that I think I really want my investments to reflect my commitment to a lower carbon world. And so you might think, well, that's relatively straightforward. You want a portfolio with a smaller carbon footprint, so you have a very clearly defined metric. It looks like in that sense, and it's something where, relative to some of the other factors, it's somewhat measurable. We know which companies have a higher footprint relative to the other ones. And so that perhaps is an area where you can then measure a fund and look at the impact and look at the output with the carbon footprint. And when you get down to the details of that, even that can sometimes be a little bit unclear whether firms are being measured fairly and looking down supply chains and all of that. So that's where you have one factor. But if we broaden it out to the whole category of ESG, you're trying to combine social factors, human rights, child labor, all sorts of issues. Again, a very long list. And you're not then adding together things which are like one another. You're adding together things which are very, very multidimensional. And so for an investor who has a broader sense of responsibility, rather than the example of someone who's focused just on climate change, it becomes very complicated to say, well, which fund is better than another fund on these ESG factors. And I think that's one of the areas where ratings really are going to need to find a framework to communicate clearly so that an investor can look at it and find what they're looking for, because maybe somebody else is very concerned about the social factors but isn't as concerned about climate change in their investment strategy. And so it is going to be something where you're going to want ratings which are quite specific to the different objectives that different investors will have.
Bob, is there a willingness on the part of companies, organizations to share this information? I mean, I know more and more board members, investors are asking for it, but in order to collect data and do ratings, you need the companies to be very forthcoming and providing this information. And my sense is, just based on what I've read, and some of this is anecdotal, is that maybe they're a little hesitant to provide this information because it opens them up for greater scrutiny and context in these things is really important. But your thoughts in terms of the willingness of corporations and other types of organizations to provide this information?
Yeah, this I would observe this as being something where everything kind of adds together with everything else. As individuals demand more transparency, that adds into the mix. As accounting standards, expectations change as people are required to disclose more, which again is a regulatory angle on it. And then as other firms perhaps start disclosing more, everything then moves together. So it'd be very difficult for one firm to suddenly say, well, we're going to be super transparent and tell you absolutely everything that we're doing, if other firms aren't doing that, because you don't necessarily have the infrastructure. It might be hard to get the data. But as everybody starts moving together, there will be some firms that are kind of pushing at the front and other firms who are a little bit behind. But what you'll see is the whole of different sectors moving together in terms of more transparency, better disclosure. And so it is one of those things where you have to look not just at the actions of individuals within the system, whether it's companies, regulators, or individuals or investors, but all of those combining together to create that change over time.
Yeah, absolutely. Last question, Bob. What about the conflict? So, here in the U.S. we have the term fiduciary. I'm assuming it's the same in the U.K. and other parts of Europe as well, where people take on the responsibility for the beneficiaries in a retirement plan. But what happens in the case where the trustees or the board may be advocating for something that maybe the employees or the beneficiaries may not all agree on? And I could see something like that happening. I mean, is that a common occurrence, or is that something that you anticipate being an issue in the future?
Well, how common an occurrence it is, I don't know, but I will say it's something which there's an awful lot of thought going into, because clearly fiduciary duty is a very, very serious thing, and nobody wants to undermine the fact that when you're acting on somebody's behalf, all of us as financial services professionals are dealing with other people's money, and that's a serious responsibility, and we don't want to either impose our own views to the detriment of someone else's financial interest, or maybe not properly reflect their views. And so that's one of the areas where I think we're kind of moving forward together in redefining, not so much redefining, but expanding our understanding of what it means to properly be a fiduciary on behalf of somebody else, because what it can't mean is undermining their financial interest to obtain a different goal. On the other hand, if it is clear that the beneficiaries in aggregate have a strong view and on some of these social issues, then it becomes appropriate to work that into the investments. If you can pursue the social or environmental goals alongside the financial goals, which to an extent is probably possible, why wouldn't you do that? And so we're really trying to find clear solutions and ways forward that would incorporate this bigger social demand for more ESG without undermining the fiduciary duty. And you're right to raise that, because that is something which none of us want to undermine in any way. It's a very important duty.
Yeah, it's certainly an issue. Obviously, these are issues that get worked out over time in newer asset classes. Bob, we're going to leave it there. Great to see you. As always, thanks for the insight into ESG and some of the latest trends. And we look forward to having you on again very soon.
Thanks, Jeff.
Well, that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, so much more, check out today's edition of The Morning Pulse, where we're off again tomorrow for the Thanksgiving holiday. And on Friday, we'll be running a rerun of one of our best shows. But we're back again on Saturday for our regular look-back show, our retrospective show, BRN Weekly. You're not going to want to miss it. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.